What's up guys, Raymond here with another stock market analysis video. So we're going to start from episode 1 because they've rearranged the layout for this app. So we're going to start from episode 1 again. We've gone into NASDAQ, the NASDAQ stocks, and now we're going to go into healthcare. So we're going to start from healthcare sector, and then we're going to go into biotechnology and drugs, and then we're going to go to the first stock, which is Amgen. Correct me if I'm pronouncing this wrong. So we're here to look at financials, the financial statements, and pretty much all financial related information about a company, just to analyze the health and just to extrapolate whatever information we can from the financial information provided. So if we go to info and stats, we see that the days range. So the market is currently closed, I believe. I believe the US market is still open until 9 p.m. So about just over 2 hours left. So 244. The range is from $244 to $249. So $5 range. The market's still open, of course. It's been open for a few hours now, so that's not too volatile. The market cap being 133 billion, which is quite high, quite a large company. Whenever I invest in, I always like to look for large companies because there's a bit more stability and assurance that you're likely to get that your capital is less likely to be lost through company bankruptcy, etc. If a company has a large market cap, it shows not only that the company's probably been around for a long time, but also that the market and people, it kind of reflects the general market trust in that particular company. I mean, why else would a large amount of capital from public investors, why would the public invest so much money into a company if they didn't trust the company? So the P ratio, which is the price to earnings ratio, the price to earnings ratio, which is a ratio which determines the price of a company of a company's shares divided by the earnings per share. So the earnings is just the net profit of the company in that particular financial year. Earnings divided by the share price, the amount of shares outstanding. So the P ratio is 20, which is, I would say, pretty good. Of course, you have to involve other factors when determining whether or not the P ratio is good or not, but largely a P ratio of around 20 or below is pretty good, especially for such a large company. It's pretty good. So revenue, it made about $26 billion, which is pretty good in ratio to its market cap. Of course, revenue is only a before any deduction figure, so we have to, of course, introduce other factors like tax, depreciation, etc. when deciding whether a company's income is good or not. So the earnings per share, which is the earnings divided by the share price, which is a factor which is half of the P ratio, is $12, which is, I guess, pretty good. Earnings per share. Price. Okay, so to get the P ratio in this case, we'll just look at the market price. So the stock price, which is 246, divided by 12.11. Let's just calculate that. Sorry if this is unnecessary, but I just want to quickly check. 246 divided by 12.11. Strange. 246. No, sorry. 246 divided by 12.11. Yep, so we got 20.31. So that's about right. So the P ratio is about right. So that is it. So let's look at the beta. Beta is just a ratio or a decimal figure representing the average volatility. It includes standard deviations and stuff like that, but it just represents the average volatility as a ratio to the market average standard deviation. So essentially, if you get standard deviation, the standard deviation of this particular stock or any stock you're analyzing, say it's the standard deviation is 1.1, so it's 10% more, 10% more volatile. It moves 10% in the 10% in the positive direction to the 10% more volatile than the market average of 1. Then the beta level would be, I guess, 1.1, I think. Yeah, but if it moves 40 or 30, in this case 36% less than the market average, then I guess it'll be a beta level of 0.64. So the dividend yield, which is the percentage of net income or earnings divided by the shares outstanding, or the share price. I think it's the share price. Let me just quickly check this ratio. Sorry, because I completely forgot the dividend yield ratio. I mean the dividend yield formula. But it essentially shows you how much, what the return on investment would be on your capital invested in a particular financial year, given the how much of the net income is given out as dividends, as cash. So div yield formula. So the dividend yield formula is the dividend per share divided by the share price. So it's just the dividend amount divided by the amount of shares outstanding divided by the share price. So another way of looking at it is the dividend yield formula is the annual dividends per share divided by the price per share. So okay, cool. Yeah, that makes sense. That makes a lot of sense. So the annual dividends, so let's just say the company gave out $1 billion in dividends. Just calculate. Nope, not the clock, the calculator. $1 billion in dividends, and the company has, sorry, $1,000 in dividends, and the company has 1,000 shares. Divided by 1,000 equals 1, and divided by the share price. Let's say the share price is $1, so 1. So the dividend yield will be 1. So you'll be getting, I guess, a 1% return on investment. So let's get back and see the stock and the financials. Oh, I guess it's kind of deleted where we left off. Let's just see if we can get back into it. Sorry about that. Okay, we looked at Amgen. Okay, so we looked at the basic financials. Let's just check if we can get more ratios. 1 day price change 0.57%, 5 day price change. These are all the price changes over the year. If anyone wants to know what the MTD is, it's the month to date, and it has most recent quarter, year to date for last financial year, trailing 12-month period, compound annual growth rate, and the year to date. I guess they have their own definitions. Change relative to the S&P, so standard deviations are here. The standard would be at the S&P. The 4-week relative over the past 4 weeks, I guess, or a specific 4-week period, the relative S&P price change would be 2.98%. So I guess kind of like the beta in this case would be 2.98%. 13-week relative, and it has different periods, up to 52 weeks, and the year-to-date relative to the S&P, to the volume, 10-day trading. So the amount of shares traded, I guess, in a 10-day average, on average and within a 10-day period for this particular stock was 2.17 million. I don't have anything to compare it to, another stock to compare it to, so I can't say particularly whether that's a lot or not. So 3 months would be 52 million. Let's just see if there's any volatility in, I guess, in that. Sorry, I just want to say, yeah. So let's just say, so how much was it? 2.17 to 52.1. So So let's just see. Let's see if we get 3 months. So 52.1 was it 52 point divided by 2.17. Was it 2.17 equals 24. Multiplied by 10 to get 10 days. No, sorry, 24. Should be okay. I'm just trying to figure out if there's some relation between. So 10 days. Okay, so let's just get 10 days. 10. Try to get 10 days to 3 months. So that's about 60. So times. So average of 30 days per month. So 3. So you have to get times it by 9. So if we times that by 9, 2.17 times 9. 2.17 times 9. Strange. That's strange. So there's almost no correlation. So 2.17 million shares traded on average between on a 10-day within a 10-day period. To get to 3 months, I thought there'll be some correlation, but there'll be some, I guess, steady amount of trades. So I didn't think there would be much of a change in trading volume, but I guess there's a massive change because there's almost no correlation. There's no steady amount of trading. I guess it's really volatile because, I mean, if you were to predict based on the 10-day average volume of 2.17, you would predict that over the next, I guess, 80 days, which is the remainder of a 3-month period, you'd get 19.53 million instead of 52 million. So I guess it's like a 250% disparity. But anyway, that is the end of the video, I guess. I don't think there's any more. Oh, I guess there are. I think I've run this video a bit too long. Let me just check if I can actually go on to a different point. This is very strange. Okay, yeah. So more financials. There we go. Okay, so we haven't actually looked at the. So I've kind of made a mistake. I haven't actually looked at the balance sheet, cash flow, and I will kind of want to end the video because this kind of run too long. So I've looked at the price per management, effectiveness, financial strength, margins, valuations, growth, others. There's a lot of information. Yeah, I didn't recognize there was so much. This is actually pretty good because for future videos, I'll need to be much more efficient when delivering information and analyzing information. So I want to end the video here. Sorry if this video is not very good quality, but I'll see you in the next video. Thanks, peace.